Hey, mic test. Hi everyone, good afternoon. My name is Jing Xiang Huang. I'm part of the team at Solve Protocol. This is actually our first time at Taipei Blockchain Week. Very, very excited to be here. Taipei as a city has been very, very welcoming. Weather today has been phenomenal and definitely extremely excited to be here. Today we're just going to talk about one topic, liquidity gateway, paving the way for the next $1 trillion in DeFi. So it's something we have been working on as a project for the last 2 coming to 3 years. Very, very excited with what we've been doing, with what we've been building. Definitely want to share a bit with everyone today. So I think stuff on this slide everyone is very, very familiar with, but maybe let's just quickly go through it. So over the last couple of years or so, we have seen a huge change in the landscape, particularly on the CeFi side. We had many centralized exchanges, centralized entities actually having issues, whether you talk about Voyager, whether you talk about Celsius. I think this whole piece in general is probably about a $100 billion market. And then gradually we are starting to see a lot of movement into the DeFi side. You can see your AMM's activity drastically increasing. You can see your perp dexes. I think what's most interesting for a lot of people are probably the LSD, the ETH kind of plays. And then more recently, over the last 6 to 12 months, with US interest rates really going up, you can see tokenized assets, tokenized T-bills, tokenized US treasuries actually coming on chain, which actually are starting to be a very, very attractive source of investments. So at Solve, what we are looking to build and what we've been building are building blocks for the entire ecosystem, for users, for traders, for everyone to be able to participate within the ecosystem. Think about us as supplying Lego blocks for you to really build, mix and match and cater to what you're looking to do. So we think in this ecosystem there are mainly 4 different kind of players. On the buy side, so users, people who provide liquidity, investors and LPs. We have your sell side, so strategy providers, whether it's market makers, hedge funds, various kinds of platforms. And then we have your vendors. We have your vendors, guys like your prime brokers, like your custodians, your infrastructure plays. And then lastly, we call it your assets. So it's your GMXs, your Uniswaps, venues where you actually can generate returns and where you can actually generate yield. So that's all. What we're looking to do is bring all these segments together and then really allow users to participate in this entire ecosystem. So if we map the entire thing out, on one end we have your capital deployers, people who supply money, people who supply funds, and people who supply liquidity. On the bottom layer is what we have as the basis for everything we build. A couple of years back, we started a token standard which we call ERC 3525. Reason behind that is because we wanted to create financial products, financial instruments on chain, but at that time there were really only 2 token standards available. The first one is ERC 20s. The second one are your 721s, which are NFTs. And these by themselves were not really sufficient. And what we did was to combine the 2 of them, made quite a bit of enhancements, and then we created our own token standard called ERC 3525. So that's the base layer for us. On top of that, we have spent probably the last 1 year actually building and refining an entire risk management platform and a risk management framework. What that means is it gives users the security that they need, especially in the DeFi world. So in the CeFi world, things are pretty well defined. You have your prime brokers, you have your custodies, and you have your various kinds of trading systems. In the DeFi world, none of this really exists. And that's what we have been building. Take for example, if you're deploying your funds with an asset manager in the DeFi side, how do you ensure that he runs the strategy as promised? How do you ensure that he doesn't take your funds and run away? So like these are things that we are building, right? You separate the ability to trade and you separate the ability to withdraw funds. So like asset managers can be delegated access to run the strategies for you, run the funds for you, but not having the ability to move the funds. And then they can further dictate by saying that if they promise to run a strategy for you in a certain manner, let's say it's delta neutral, then you should be able to see that the positions are all delta neutral, the positions are all flat. If it's not, then what can you do? So we have systems in place to ensure that they abide by those rules, and if they don't, we have liquidation engines and liquidation balls to close everything out. On top of that, if most of these things are pre-agreed, so let's say we have a stop loss of 3%. So once it hits these stop loss levels, then positions will get automatically closed out. So you as a user know what your worst case is, you as a user know where your risk is, and it's all pre-agreed and predefined. So from our perspective, we mainly do 3 broad kinds of assets and 3 broad kinds of offerings. The first one that we have are DeFi assets. So DeFi strategies, example, on GMX, we run delta neutral versions, delta neutral vaults. On Uniswap V2, V3, we run LP farming, various kinds of yield enhancement and yield farming strategies. We do cross-chain arbitrage, cross-dexes arbitrage kind of strategies. On the CeFi side, similarly, we do stuff like your single exchange, cross-exchange, arbitrage offerings. We do CTA offerings, and also some high-frequency kind of stuff. Recently, we've been spending a bit of time trying to explore the RWA or the traditional finance kind of world, whether it's trade receivable financing, whether it's tokenized T-bills. It's stuff that we are gradually looking to do over time. We're not really in a rush to do this because we want to see how the entire segment moves, but this is something we're definitely exploring. And in addition to that, what we have done is we're trying to create risk profiles for various investors, risk limits on what they're looking to do. So if you're low risk, you're a medium risk, or you're a high risk kind of investor, there should be buckets for you, right? If your risk is low, your risk is medium, you can go for strategies that are more delta neutral, they don't really have directional views, they don't really have macro views. You make most of the funds from really just trading fees. And then if your risk is higher, you can go for more liquid funds, liquid strategies, CTA kind of strategies, stuff that can potentially double or triple up in a bull market, but then similarly on the drawdown side, it will be quite significant as well. In addition to that, what we have also done is, for every single offering, you can slice and dice as many ways as you want. So some people like to split it into a senior, into a junior structure, where the senior will get protected, your returns are lower. A junior, your returns are higher, but then you take any first losses for any negative returns. So over the last few months, we have been running platforms and running strategies around all these things. At the moment, we are running something in the range of about 90 million in assets across various strategies, DeFi and CeFi. And I think we're going to keep growing. We set ourselves a target over the next 1 year, we want to grow this number to 500 million. I think we're relatively confident on where we're going to get to. In the next few months, we're going to have quite a lot more updates you'll see from us, and we're quite confident on those goals actually getting there. At the moment, most of our focus has really been on DeFi, specifically on the Arbitrum ecosystem. We are probably the biggest vault on GMX right now, supplying liquidity to them. We also are running quite a lot of LP strategies in that space, and we'll gradually open up a lot of these to DeFi and retail users. Going forward, our next focus is going to be on Mental, the L2 chain. We are very, very bullish on this. We want to get involved with them as early as possible. We are designing quite a few offerings in that space, specifically for that chain, which we expect to launch probably in the next 1 month or so. So I think we're quite happy with where we have gotten to over the last 6 to 12 months, and I think I'm very proud of the team. But what I'm more excited about is what we're going to be building going forward. So there are 3 main things that I would like to focus on. The first thing are our multi-strategy vaults. So think about it as You can invest in an asset manager running a certain strategy, and gradually you're going to meet more asset managers running the same strategies. So example, it could be guys running arbitrage strategies. What if we create an ETF kind of play, a vault kind of play, where if you invest in this vault, and you automatically invest into 4, 5, 6 different managers running the same thing. Then in that case, you don't really have to do that work. You leave it all for Solve to do it for you, risk management, risk controls, asset manager selection, and everything, so your risk gets completely diversified. So that's one thing that we're working on. Second thing is additional liquidity. So in the DeFi space, there are quite a few things that are pretty hot, especially in LSDs right now. So number one, Blast. Everyone knows what's going on, right? You're putting your coins there. It's really going, at the bottom, it's really just staking, liquid staking. What's the other thing that people are looking at? Probably farming eigenlayer airdrops, right? Via the various LST plays. What if we create a channel for you that you can get access to 4, 5, 6 of these different offerings with just a single click, right? We do all the work for you. You just deposit into the vaults, and then you get access to all these kind of offerings. Would something like that be interesting? I would think so. And the last thing, we call Solve Safeguarded. So I think, personally for me, one of the largest problems we face in this space is a lack of trust, specifically counterparty risk. So what we have done in the law really looks to reduce counterparty risk, looks to reduce your need to actually trust various partners or various kind of providers. On top of that, what we are building right now is really to enhance this, such that you don't really even have to trust us as a platform and everything. All the assets are going to be under yourself. You will have full control, but at the same time, strategies all can be run via that. So everything will be pre-agreed. Counterparty risk we look to reduce close to zero, and really look to help you actually make this work. Anyway, so I mean, before we get to this point, right? Like, what we are doing right now over the next few weeks is that we are designing. We're going to be having some form of an airdrop next year. We are designing a point system that we'll probably look to launch probably in January, and we'll publish this. And so stay touch. We will publish it. Everyone will know what's going on, and hopefully that can actually help our users actually be more excited. So that really brings me to the end of our talk. I think we just want to say a thank you to quite a few of our investors over the past who have been very supportive, very helpful, and really helping us grow. So yeah, that's it. Thank you, everyone.